Hello everyone and welcome to another video on the channel. Today we are going to go very in depth and this will be a very important video for all of you. Okay, we're going to talk about who are the top 1% traders or who are the top traders in the world and how do they operate, right? How do they trade? How do they do things? We will show you all of that in this video. And we'll start off with this article on Wikipedia about the forex exchange market. Okay, I'm sure most of you haven't even touched this article in your lives, right? And if you're serious about being a forex trader, you should know this article, by memory. Okay, you need to know its origin, you need to know its history, you need to know everything, the volumes, who created it, everything about it. You need to know everything. All right, you need to be a lawyer in this case, remembering each and every sentence. Okay, and if you haven't already, just check it out. It's easy, just on Wikipedia, forex exchange market. It's disrespectful to your business if you don't know this article. But today we're going to be talking about volume a lot and who are the traders, the best traders that are moving markets. And we're going to take a look at the top 10 currency traders. These are just the top 10 guys. All right, we know that the daily volume is about $7 trillion a day. Okay, so who is trading those big amounts? Well, to start with, it's these top 10 traders or banks or institution, whatever you want to call them. All right, so you can see a lot of American companies. You have Bank of America, you have JP Morgan, you have Citi, Goldman Sachs, you have institutions, you have Deutsche Bank as well, huge German bank. You have the UBS in Switzerland. You have look at this, it's an algorithmic trading company. All right, huge company. So if you know that the daily volume is about $7 trillion a day, JP Morgan alone is already trading over 10%. So guys, all this together combined is probably 65%, something like that. All right, maybe even 70. I don't know. Should count it properly, but I think it's between 60 and 70% of the whole volume is just controlled by the top 10 guys. There's a huge list of banks and institutions that are trading every single day, and they are apart from the volume. So we are nothing. Okay, we are probably 0.01% as a retail traders in the forex market. So you have to understand that in order to survive and be profitable, we have to follow what they are doing. How are they seeing things? How are they operating? How do they trade? Okay, and most of these companies, they have several different systems. Okay, they have, like this company, for example, they have algorithmic trading systems, which those are trades that are executed automatically, on autopilot, basically algorithmically, and they need developers for that. They need coders. This is huge work, and then they go in and out of trades. Okay, normally this is high frequency trading. These are very low time frames. Everything goes very quick. Normally those are lower risk to rewards. It's a robot basically that is trading, so everything is very systematic, no emotions, and it's just in and out of trades constantly. Moving stop loss to break even automatically, everything, all that stuff. Then obviously they have some more swing positions, which normally they take between 1 and 3 months to hold for these type of financial institutions. Normally they hold trades for that amount of time, where they obviously make more money. This is why we always mention that swing trading is the key to financial freedom, and it's not like intraday scalping and all that stuff. Although you can make money with it, it's just a lot more potential in swing trading. So take a look at this whole article, read it. You should memorize it inside out. So let's get to the charts. So we know that these institutions and banks and all that stuff, the top forex currency traders, they are not, they are going to be buying at the cheapest price and they're going to be selling at the most expensive price. Right? It's the same like Amazon, for example. You think that Amazon, let's say they are selling their Alexa, right? Let's say they sell it for $50. Okay, do you really think that their cost of doing it is more than their sale price? Of course not. But you have to understand that this is how most people trade. Okay, so the way people trade, retail traders, is they're going to be buying when price is in an uptrend like this and it's coming to a sell zone. Then they will be buying. They say, oh, okay, look at this, and look at the EMEAs. Okay, they're beautiful, aligns, and we have some trend line like this, and we have a nice Fibonacci with this and stuff. This is how they're doing things, and then they're going to be buying over here. Do you really think that these big guys, you really think they start buying over here with their stop loss over here and their targets, like this or something like that? No, of course not. They're going to be buying over here, okay, with very tight stop losses, and they're going to have very nice targets, and they're going to have very nice risk to rewards. And they're trading this with thousands and thousands and thousands of lot sizes. This is what they're doing. Same thing with sell zones. Okay, do you really think they're going to be selling when prices, already dropped? No. They have a huge impact on these drops because they're saying, okay, let's buy $1 billion of TVPJPY. Of course, it's going to have an impact, guys. Of course, this is going to have an impact. Okay, you got to wake up. You got to understand this. Okay, so we are just waiting for these levels. For these levels where they bought, we're just waiting for it to come back and then to wait and see if they want to protect this area or not. They originally bought here. Maybe they took some profits over here. That's why it dropped again. Okay, and then they come back if they want to buy again. This is our safest bet, guys. This is our safest bet. Okay, because this is an area where they bought already a lot of lots. Okay, they bought a lot of GPJPY. So our best bet is that they're going to buy again, and just they're going to add more positions to it, and they drive the price higher. And then this is what we're waiting for. Exactly the same for a sell. They sold here. We're just waiting for them to make some profits, put the price back, and sell a lot more. This is exactly what we're waiting for. And like I said earlier, the time frame, doesn't really matter, but this works on all time frames. But you have to understand that the higher the time frame, the more likely it is that it will play out. So, like I said earlier as well, is that they focus on position trading. Okay, they hold trades for 1 to 3 months, and those are the trades they make most money with for their institutions and for their clients. Okay, because all these institutions, obviously, they have investors that gave their millions and millions of dollars to them to turn into more millions of dollars and potentially turn into billions. All right, same like Ray Dalio, who has a hedge fund managing a lot of capital. Those are the companies that also have impacts on these markets because they're trading with such huge capital. So let us take a look at the weekly time frame, or let's go even higher for you guys. Let's go at the monthly. Okay, we're gonna do something different this time. We're gonna look at the monthly time frame, which is also a time frame that these big banks, institutions, they love it. All right, nobody loves this, but they love it. Okay, and why is that? Because they remember the drawing that I made. If you just take a look at the line chart, you can see, okay, price reacted from here. What did it do? Came back, just making some small pullbacks, okay, coming back, and there we go. Okay, let us maybe show the candles, or maybe even not. Let's maybe remove the candles. What do we see? We saw the exact movement that I just drawed in the beginning. You can see they bought here. Maybe they took some profits at this level. Okay, actually, let's do this. Maybe they took some profits at this level. Why? Because there's a monthly zone over here. So they say, okay, let's take some profits. Price started dropping. They were selling and selling and selling and selling. Okay, on their way down again to the place where they originally bought. And what did they do? They said, let's buy some more. Okay, again, they're taking profits. Maybe not all of them. Maybe they're not taking all profit because maybe they want to push the price higher. As you can see, there's not really a reaction to this sell zone. We did have some reaction, but the reaction wasn't major. It didn't even create any break of structure. You can see it went slowly outside the zone, strong in the zone. Again, outside the zone, strong in the zone. So maybe we're going to see some more bullishness. But obviously, we don't decide this. The big guys decide this. The banks and the institutions. Okay, so now it's just waiting time. And the monthly time frame, guys, this is something that nobody touches, and it's just so important. Even the 12-month, which is something that we look at, and the 3-month as well. Okay, quarterly, because we know in business everything is related to quarterly and annually. So why aren't you looking at 3-month charts and 12-month charts? Why aren't you looking at the quarters? Why aren't you looking at the yearly? Okay, it's disrespectful to your business if you're not doing this. So you have this sell zone over here. Beautiful sell zone. Price came into it. What do we have? A very strong bullish engulfing the last couple 3 months of all previous price action. So we could definitely see some more upwards movements. Where is our next zone? Very far away, guys. So this is just beautiful to see. Okay, this is beautiful. How many pips are we away from that? We are over 3,000 pips away from that. So of bullishness, guys. Of bullishness. And probably, we could see some reaction to this, but I think we're going to be even more bullish. Why? We didn't even create a break of structure. Look to where price went. To this level. Where's the lowest high, the lowest low here? Over here. It didn't even create a break of structure. So we might see some reaction, but I don't think the reaction will be major. Okay, maybe we'll do something like this. Okay, and then maybe we'll have some reactions to this level or this level, and then go further again to the next one, which is this one over here. Okay, so I think we have a lot of bullish potential for this pair. Okay, obviously you need to analyze your own pair, and I recommend you're staying on one single pair and you're not staying on most of them. So this is the 3-month chart, guys. This is just very, very important chart. You can take a look at the 12-month, but you don't have that much information. But it's basically the same thing. It's just less candles. So we have this break of structure basically of this high right here, and you can see that it's just been rejecting this area with bullish pin bar, bullish engulfing of the bullish pin bar. Very strong signal, guys. This is so strong. Very, very bullish. Okay, this is the next area, which is also the 3-month high. As you can see right here, this is this high, or this is also the 3-month high, as you can see right here. Okay, so let us go back to the 12-month. So this will be the next area of interest. The price likely is going to a lot of bullishness for GJ maybe this year, which would be beautiful to see. Okay, a lot of money to be making, a lot of pips. Okay, and obviously the next area is even higher. Like I said, this area didn't create a break of structure, so there is very good chance that maybe we'll see some reaction to it, but not the strongest one. I don't think we'll see a change in trend. I think it will continue on its bullish way to at least these highs over here, which are 8,000 pips away. And you can see what GJ can do. This is literally in 1 year that it went from this price, which is 221, it went to 130, which is almost 10,000 pips just in 1 single year, guys. This is amazing to see that this is possible with this pair. So we could see a lot of strong bullishness very, very soon, which obviously means that we can make a lot of money on our buy trades, on weekly buys, on 4-hour buys, all that stuff. Okay, so removing all these zones on the weekly chart, okay, we have this break of structure again of all these highs. What happened? The price came back and is reacting to it. Went to the sell zone, to the supply zone. Did the supply zone create a break of structure? No. So what did we see? We saw some reaction to it. Why? Because weekly zones are very strong. So we saw some reaction of it around 500 pips, a little less than 500 pips, and we're coming back into it. So there's a very good chance that we'll continue its bullish way to the next weekly zone, which is a fresh weekly zone over here, as you can see, where we could potentially see some reaction. And since this could potentially do like this and create a break of structure, we have another buy zone over here, and maybe price will react from this sell zone over here to this buy zone, and then we can buy here and go further. So it's very simple, guys. It's just all about, buying as cheap as possible and selling as expensive as possible. Okay, I'm not going to even dig deeper into lower time frames. It's all the same stuff. You have to understand that the higher time frame is stronger. So the month and the week are very strong. I know you probably don't like this because you say, oh, this, it will take me, maybe I'll have to wait 1 month or 1 month I have to for price to get into this level and then find a sell there. And then maybe I have to wait another 1 or 2 months for price, or 3 months for price to hit my target. And then, finally I can enter here again. And then I have to wait maybe 6 months of, holding it to the next target. Well, yeah. Okay, this is how you're gonna make most of the money. You want to work every single day for 10 hours on the chart and make less money than trading once every 2 months? Okay, you need to ask yourself this question. You want to make money or not? All right, this is not hard, guys. You don't have to spend 10 hours a day on the charts. Okay, I'm not saying you have to only swing trade. You can trade on the 4-hour time frame as well and find trades. Okay, you have trades over here like this, supply and demands that are working out just fine, beautifully. And you have obviously some scalps that are playing out as well. You have some supply and demand zones that are playing out, nicely, like some stuff like this, which you can definitely do. You just have to find your own system and know what days you're looking to trade, what hours you're looking to trade, what sessions. Okay, what is your session? Is it London? Is it New York? Is it you have to know all this. Yes. So find your own trading system. What works for you? Maybe you do both. Maybe you have, just one account that you're swinging on like this, and you just, click when you're on a buy zone, you click sell when you're in a sell zone, and you just forget about that account. And you have another account maybe for like smaller time frames, so you can make some money, every single week as well. That's really up to you. But guys, I just want to talk strongly about, the top traders, how they see things, how they operate, how they do things. All right, and maybe this was a boring video for you guys, but this is very important. Okay, if you really stick it to the end and you listen to the video entirely, you're gonna be on a good way in your trading journey. Okay, because this is definitely not told by a lot of people on social media. Okay, they're always talking about technical stuff and this and that, and I talked a little bit about technical stuff, but you also could not call it technical. It's basically the foundations. Okay, of buying low at cheap prices and selling high at expensive prices. Okay, and understanding who is behind this whole thing called forex. So guys, I really recommend you go to Wikipedia, look at the article, give it a read, study it, understand it as much as possible. And guys, like I said earlier, if you stuck it to the end, then congratulations. You're definitely you're going to be doing very good in trading if you understand all this and you apply it, you understand it properly. So yeah, guys, we really appreciate you for watching this video. If you have any questions, let us know in the comments down below, or send us a DM on Instagram. We'll always be more than glad to help you out. We really appreciate you watching this. We would also appreciate the like or the sub if you haven't already. If you're looking for more in-depth training, you can always take a look at our link in our description. That will take you to our website. You can watch our case study, what we've been doing with our program for the members. You can always book a free discovery call with one of the coaches of our team if you want more info. So guys, thank you for watching again. We'll see you in the next video.